Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, December 1st. Stocks on Wall Street are set to kick off the final month of the year with solid gains. Strong economic data from around the world are boosting sentiment and helping investors focus on something other than Europe's debt problems. Following a better-than-expected reading on U.S. manufacturing yesterday, China's Purchasing Managers Index also topped estimates, rising to a 7-month high. In addition, Chinese officials indicated that they're not planning another round of monetary tightening, saying that the policy measures they've already taken have been effective in slowing inflation. Stocks across Asia were broadly higher overnight.
We're seeing a strong rally in Europe, and the euro is rebounding from recent lows. According to the Financial Times, ECB President Jean-Claude Trichet hinted that the central bank's bond purchase program could be expanded to help fight the sovereign debt crisis. However, the recent bailout of Ireland and the current focus on Portugal and Spain prompted Fitch Ratings to warn investors of credit losses on European debt, and S&P placed Portugal on watch for a downgrade. Offsetting those warnings was a better-than-expected reading of German retail sales in October, and manufacturing activity in Great Britain accelerated to its fastest pace since 1994.
The U.S. manufacturing sector is back in focus this morning when the Institute for Supply Management releases its index for November. It's expected to rise slightly after a big jump in October. We'll also get a look at construction spending at 10 a.m. Eastern Time. Ahead of that data, investors are reacting to some news on the labor market. Non-farm productivity rose 2.3% in the third quarter, following a decline in the previous 3 months. And unit labor costs fell slightly. Both numbers were roughly in line with estimates. Meanwhile, ADP announced that U.S. employers added 93,000 jobs in November. And outplacement firm Challenger, Gray & Christmas said nearly 49,000 people were laid off last month. Those readings come ahead of Friday's government employment report. Economists expect that the U.S. economy added 143,000 non-farm jobs and that the unemployment rate held steady at 9.7%.
The automakers will be in focus today as they release their domestic sales figures for November. Edmunds.com predicts double-digit gains from Ford, General Motors, and Honda, with Ford leading the way. Overall, analysts expect sales to remain relatively strong, showing more evidence of stabilizing new car demand. GM's report will be its first since its initial public offering last month, and it's expected to post a 14% improvement from a year ago. But Toyota's sales may have declined last month, as the Japanese automaker is still reeling from several recalls.
Keep an eye on the financial sector today. State Street may lose ground at the open after it announced 1,400 layoffs, or 5% of its workforce. Meanwhile, CME Group was raised from hold to buy at Stifel Nicolaus. And JP Morgan placed a new overweight rating on American Express and a new neutral rating on Capital One Financial. Another industry that may get some attention is the retailers, after Citigroup instituted coverage on many of them. The only buys among the group were Abercrombie & Fitch, Chico's, and American Eagle Outfitters. Ann Taylor, Guess, Talbot's, Limited, and Aeropostale were given hold ratings. And Citigroup recommended selling TJX, Gap, Urban Outfitters, and Ross Stores.
Some other analyst actions to tell you about. Microsoft was upgraded from hold to buy at Cross Research. Goldman Sachs resumed its neutral rating on MetLife and boosted Tyson Foods from sell to neutral. Meanwhile, RBC Capital raised Host Hotels and Resorts to outperform and also weighed in on several property stocks. And UBS is making some calls on individual sectors of the U.S. economy. It said it prefers technology, industrial, and healthcare stocks next year. UBS also raised energy and discretionary stocks to market weight and downgraded consumer staples and telecoms to underweight. Finally, UBS predicted that the S&P 500 index will jump 12% next year, finishing 2011 at 1325. That's the latest from Weiss Research. Have a great trading day.